Happy Friday to you. I'm Marlon Bowling, and also happy September. How about that? We're into the month of September. We rolled the calendar over now, and we also have some new information to talk about here this morning as we get into a new trading month here. We'll bring in Rich Nelson of Allendale Incorporated in McHenry, Illinois to talk about it. And Rich, this all has to do with Allendale Incorporated. You guys have done your own very extensive, exhaustive farmer survey of yield estimates, yield production for corn and soybeans nationwide. And I know you've been at this for at least a couple of weeks now, and I believe you have finally published your final results. What did you come up with?
Well, as far as our nationwide survey, 28th annual right now, covering 32 separate states, we suggested the U.S. corn yields 166.7, and that's down from USDA's August of 169.5. On the soybean side, we have 47.1, a little lower than most people would expect, and that would be under USDA's numbers from August of 49.4 bushels per acre.
So how does that translate into your total production now compared to USDA?
Now, on the production side, looks like corn here, 13.920 billion bushels, so about 200,000, a little off that compared with USDA's 14.153. And as far as numbers on the soybean side, 4.179 billion bushels, a little bit off here from USDA, 4.381. Of concern for us here, we saw a lot of variability in these fields. Really, Iowa was one state which kind of stood out here, Marlon. And in fact, for south central Iowa, that district itself, 94 bushels an acre, compared with all their neighbors in that 179 and higher range.
All right, Rich, of all the numbers that you folks had processed in the compilation of this survey here, what was the biggest surprise to you?
You know, I've got to say, obviously, the variability issue here, it actually really showed up for our survey, at least mainly in Iowa. The numbers, we expected it to really show up in Indiana and Illinois as well, but surprisingly, those numbers were relatively consistent with the previous year's surveys. Like I mentioned, the real state which showed so clearly in our numbers that stood out was Iowa. I mentioned that south central corridor, 94 bushels an acre. Their neighbors in the southeast at 149. But like I said, the other seven districts in Iowa certainly doing much better.
Okay, so do you think that will have much market impact today, given the market move that we saw yesterday?
I will think it probably adds a little support for us on the soybean side here. As far as the soybean number, like I said, 47.1 bushels an acre, probably one of the lower estimates we're going to see as far as these next few days here as far as estimates there. But I think this will support soybeans. Without the clear, long-lasting forecast, though, for extensive cold, I don't know if we're going to get this a sharp run up here just yet.
Well, we talked about it here in the last day or two about the fact that we were coming up at the end of the month of August. A lot of times that leads to a lot of position squaring, profit taking right before the end of the month. Window dressing, as the traders call it, to make their books look as good as possible for profits at the end of a trading period like that. So we had a big surge late in the day yesterday. We were talking about the prospects of a snap rally, and that appeared to be the case yesterday. Now, overnight, we can take a look at our current prices here and see if we had any follow-through or not. Remember, we had double-digit gains to the upside in corn and soybean trade yesterday. Well, overnight on the Globex market, here's a closer look. On the corn, yeah, a little bit of follow-through, not much, though. We had December 2.5 higher at 360 1/4, toward the upper end of the range. On the soybean trade, we had the November 5.5 higher at 950 3/4, and we'll take a peek at Chicago wheat overnight. We had December 5.5 higher at 440 in the Globex trade last night. We'll see what the daytime session brings. Rich, we'll bring you back here in a moment, and we will talk livestock when we come back right after this. And we're back talking with Rich Nelson of Allendale Incorporated in McHenry, Illinois. Now, I want to dissect what's going on in our livestock trade as we wrap up the week and open a new trading month of September here. So, Rich, tell me about this livestock trade as it happened yesterday. Did you see a lot of evidence of month-end profit taking in the livestock trade?
On the livestock end, you can maybe make that argument possibly on the hog end of things. Very nice rally here we saw at the midday run as far as the hog side, and this comes after we've had that sharp drop in prices, and also on the pork end, we do have the seasonal. Keep in mind, from August 28th to September 15th, we have that 15-year average seasonal based on the buying for October's National Pork Month. As far as the beef end of things, I can't say we saw too much of a change there on that picture. Looks like the trade's still pointing out. We saw some Iowa-based trades, 104 on the cash cattle end. Still seeing some new problems still continuing on the beef end here.
Yeah, I was looking at our livestock summary from late yesterday, and if you take a closer look here at the prices, on the state breakdown from USDA, it looks like Kansas actually had sales. They had sold about 8,800 head yesterday, and it looks like on the low end of the range, we had some heifers that brought 103 at the lower end. The upper end, we had steers and heifers bringing 105 per hundredweight. Nebraska sold about 5,500 head at 164 to 166 yesterday per hundredweight. Texas had roughly 2,400 head at 104 to 105. Colorado had 2,600 head at 104 to 105 as well. And in Iowa, it looks like 1,300 head yesterday on a dress basis, and the market there was established at 164 to 165. I guess when you look at the live rundown there on the live sales yesterday, you'd have to call it at least, steady to 2 lower, I guess.
There's no doubt. And in terms of the trade's mindset, this continues with these past few weeks of pressure. Keep in mind here, as far as these cash cattle here for next week, obviously we'll have a slight drop-off in slaughter numbers, but they usually do build back up as we go into the later September timeframe. So we'll see what type of supply hits then. And
I do see where the beef cutout values did firm up just a little bit yesterday afternoon. USDA said the choice cuts were up 19 cents. We had select cuts 22 cents higher, so not a big change there at all yesterday. But if we look at the pork carcass cutout values, those have seen that belly market really decline for a long time here. I remember I had checked, I hadn't updated a certain application on my phone a while back for a while. And last time I had checked it, it showed the belly market at about, I believe, $214. And now we look at it, and it's all the way down to 126 or 125 in that neighborhood there. It was down once again yesterday. So talk to me about this pork trade here today. Is it showing signs that maybe it could be bottoming or carving out a bottom at least or something here?
I do think so. On a supply basis, we're still going to have some problems with this rising supply issue here as we go into November. But I think as far as today's discussion and this next few day period in front of us, this October National Pork Month is an issue which we can't ignore. I can't say it's bleeding yet into the cash pork side. As you mentioned, we had lower bellies yesterday and a 97-cent lower trade on the wholesale pork side. But possibly in these next couple of weeks, we should see a change there and maybe give us a little 2 or 3 week bounce here on the pork end.
Rich, good to talk to you. Thank you so much for all the information, and thanks for sharing the details of that survey as well. Rich Nelson of Allendale in McHenry, Illinois. So, Janet, there you go, setting the table with a lot of information.
And day 1 of September, here we go.
Yeah, happy September.
That's right. Thank you very much, Marlon.